Hello.
Hey Pete.
How's it going?
I love the picture.
Trying to paint a picture of what I think is happening right now.
Oh my gosh, it's so true.
Not quite a bull, not quite a bear. So I didn't think that one fit today. I think little guy trying to balance holding it up is my impression of the market today.
Yep, I kind of have to agree with you there.
So by the way, thank you for meeting me a little early. Appreciate it.
Oh, my pleasure. It's fine.
I think we are getting exactly what we expected today. We didn't do the sub 100 million shares today, but we certainly didn't do the positive 150 million to say that today was a significant day higher.
Right, I actually agree with you there.
We
We still have.
spent. I'm sorry, go ahead.
No, I was going to say we still have a lot of people on the sidelines, especially institutions, I think.
Yep. We spent a lot of time in the pre-market meeting today discussing the significance of why we keep bringing up it's more than just price action. You have to see what's going on day to day. What's the volume in sync with that price action? Is it bigger on higher days? Is it lower on on higher days? And today was kind of. I actually was expecting it to go a little more sideways, and I actually kind of thought we were going to sell off again. But then, lo and behold, we actually caught a bid midday there.
Right.
So I have to say that was mildly positive for the Bulls, but I don't think it's anything to get crazy excited about.
Right, I agree, and I think Janet Yellen helped a little. At least she didn't say anything that people saw as real negative.
Which is she seems to be a professional at that right now.
Right, I absolutely agree with you that she sits on that fence there. And so since I don't think it was that she said something positive, I think it was that she didn't say anything to spook people.
Hmm.
So I didn't see it as a real positive.
I think what scares me a little bit though is how dramatically people are weighing what she says right now.
Yeah, I agree. Definitely.
We're not talking about the possibility of her saying we're going to go from 0% to 5%. You know,
Right.
we're talking about to 0.25%.
Yeah, yeah, exactly.
Now, the amount of bated breath that people are waiting for her to say something, I just don't see how it has this much significance. I mean, is 0% interest rates, or as close to it's been for this long? Is it really? Is the entire economy really teetering on that?
Right. And if it is, then we're in big trouble.
Exactly. That's exactly what I'm implying. That scares me.
Yeah.
you know. So I guess getting into getting a little further into the recap today. This was actually a question. Again, talking about the morning meetings. This was straight off the blog today, and I think it was an important one because, and actually the way the spies played out today, it kind of forced that decision. Do you plan to trade weak stocks long today, or do you plan on just waiting for short sales in downtrending stocks that have selling order flow? And what's interesting about the way we were presenting this to everybody, we were basically saying that if you plan on trading weak stocks long, we were telling everybody that means you're in day trading mode and you are only using day trading criteria to determine that you want to be long, because most of these stocks, other than a couple, and especially Nike, which we'll get into in a minute, other than that, most of the stocks were bearish. So if you wanted to buy them today, you had to admit to yourself you don't have a lot of price history behind it. Your conviction level should not be that much higher. And that basically translates into different trade management. In other words, you're probably going to be booking profits into momentum as opposed to looking for a spot to add to it. So that being the case, at this point here, when we've started to roll over, I'm like, all right, here we go. The people that were patient are really going to get paid and get another trend day down. And quite honestly, I think we would have gotten that if it wasn't for Janet Yellen today.
Yeah, I definitely agree with you.
So now we're opening up at or near, or excuse me, we closed today at or near resistance from the very, very large down day with good volume. Um, let's call it I hate to go this deep into it, but let's call it a Fed induced afternoon rally, for like a better way of putting it, even though it really wasn't that
Yeah, it
technically.
wasn't even a rally. It was just that it was supporting the market. It was a Fed-induced support because I mean, I think when she started to speak, we were up 180, and then I mean, we closed a little higher than that, but I didn't see like huge, and particularly a lot of stocks didn't participate.
Yeah, that's actually something I noticed too. Even though like the financials, Goldman traded down, held that key level that we've been watching for a while, but still closed negative from the open. So there was still order flow was there was no lid off taken off the order flow where it was big monstrous green day.
Right, right, exactly.
So I guess the question for traders to walk into tomorrow with is, today's gap. Let's face it, this morning's gap. Everybody I spoke to is like, why are we gapping higher today? Um, so that being said, let's assume it was on the anticipation of what we got on the close today. So that's out of the way now, and nothing changed. Does all
Right.
this, do we resume what we were doing prior to that? I don't like. I can't see any reason uh, to say, you know what, today's gap was the greatest thing in the world. I can't wait to be a buyer tomorrow. Other than a few stocks, and again, I don't want the market to go down. We're just reading the tape. But who could make an argument for right now to say I'd rather be long?
No, I absolutely agree. In fact, I was really judicious in what I chose to get long today.
So that being said, let's move a little bit forward into what we're looking at. Again, we're just spurring conversation for what you should be thinking at whoever's listening to this right now. How do I perceive the way the price action is unfolding to give me a conviction level for how I want to manage my trades? That's the point that we're making. So if you planned to trade weak stocks long today, you had to recognize it was just today's price action and order flow you were trading with. If those weaker stocks rolled over like they did in the middle of the day until they caught that bid, that would have been a more aggressive trade because you had more price action and more order flow, which is more longer. If it was a longer time frame, you have more money causing that longer term move, and then you're just hopping on a short term ride. So that has to affect your trade management, today, tomorrow, or whatever it happens to be. So getting into basically, this is what the market looked like heading into today. Clearly a mixed market. Clearly, there wasn't anything that was like, oh gosh, this is definitely long. I mean, there was gray. Every shade of the rainbow is on here, other than blue, I
Right,
think.
exactly.
So here's how we closed, and this was actually the interesting part here. This I had people. I was at a market imbalance and blah 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 blah. When all is said and done, it basically got down to the level that we've been watching. That coincides with last year, and was a doji at the end of the day. So when you start to see this type of price action, and again, we discuss this often in our live trading in the 9:30 meeting, you must learn to distinguish between when there is institutional participation and when there's not. And again, that will affect your trade expectation and your trade management, because when you're comfortable that the institutions are doing something obvious, when the order flow is obvious, you will not get this. You will not get down, then up, then down, then up, then down, then up. When there's pressure, when they got their throat to the market and they're not letting it up, you see downtrends. When everybody's looking at the same side and the other side, you get tight consolidation patterns and you keep going higher. This is a market, and again, we're using the SPY because, and actually, Maren, you and I never had this discussion, but I feel like using the SPY because it represents a better broad part of looking at the market than just 30 stocks in the Dow or just tech heavy NASDAQ.
I absolutely agree with you. I think right from the beginning, we both started looking at the spider syndrome. We even mentioned it to each other.
Yep. Again, so as you're sitting at your screen, and when you're doing your recap at the end of the day and your own review of what whoever's trading, you want to look at it and say, okay, can I recognize? Should I have traded more aggressively today? Did I trade poorly because the market was tough, or was I not paying attention? And the first thing you have to look at and say, okay, assuming I followed my rules, was it a tough day to trade? And again, we're just using the SPY here as a global assessment of looking at a chart. When that happens, like it happened yesterday, there's not clarity because institutions are not holding one side or the other. So that will affect your. So you need to learn intraday or swing trading, whatever time frame you're watching. You need to have a structure in your head to say it's obvious, and my conviction level should be pretty good to hold these trades versus it's all over the place and it's not worth risking capital because the risk you have to accept is not commensurate with the profit potential you believe is going to occur. And that has to happen first before you look for an entry trade. You have to be okay that the trade makes sense.
Right. I totally agree.
So here is a couple of notes from this morning. I think the most important part here, again, we spoke about the 188 level for 2 days now. I actually thought we were going to pause. I really didn't think we were going to have the type of move that we had today. And again, we'll find out tomorrow, certainly, whether or not it was just an afternoon balloon to the upside because of Janet Yellen. But this is actually the important thing here. A bullish day, yes. High volume, no. Probably got a little bit more than the lighter volume I might have expected. But again, we'll put it all in context, especially because tomorrow or today closed roughly at the same high as Monday's high. So we're going to see it'll be a really good uh, context. Hopefully, if we open neutral tomorrow, but this was the reason that, again, also that we didn't think that we had a lot of downside today. Quite a few stocks, to give them context, were at support, near support, or oversold. And just again to define that, what does that mean for you as a trader? Oversold, it can stay oversold forever. So you don't want to use that necessarily as a divergence. What you do want to say is, what are the odds for continuing follow through before a pause? So again, today's higher open was not a surprise. The slow drift higher was not a surprise. Yellen speaking in the middle of the day probably messed up the sell-off, for lack of a better way of putting it, but it is what it is. Yeah, we have to trade what we see, and if you were in day trading mode, you were only trading off of those intraday parameters. So this is what we ended up at the end of today, and obviously Facebook's one that we've been watching for a while. Apple's still a little disappointing, even though it closed positive today, but that was mostly on the gap. So again, now we're green on the screen across the board. Is that misleading the way it's been a couple of times recently? Well, I don't know if today I would say it's misleading because it gapped higher and a lot of stocks closed on the highs. It's just really just a question of how we're going to open tomorrow. I think today's open threw a lot of people for a loop. I know at the beginning of the day we were talking about, within the first 20 minutes, the market already went its average true range from the previous day to I think like 9:50 in the morning, and then had a lot of that to work out. So, what do you think about tomorrow?
Well, I think we're going to have I'd like to see an inside day, and I would like to see, and I think we need some direction in the market.
So let's go to the market. We'll take a quick look at the SPY there.
Open higher, it's not a buy, I don't think.
Well, the next level we have is all the way up here because remember we were in that box, then we set a new box, we got out of here, and now we're back in the box again. So there's no gap fills or anything like that. We're pretty much just going to open right here at this high. So we're looking all the way up around 195, which is the top of this box as well as the 20-period exponential moving average. Now, if we have another $4 update and retrace 100% of these two big down days, I mean, that officially, in my mind, says this market is zero conviction on either side of the market, and some other catalyst other than day-to-day price action has to come back in.
Right. Otherwise, you have to just trade day trading. You just have to trade on the bars in the day. Yep,
exactly, and that's exactly what I mean. That's a good explanation. Thank you. It means you're day trading mode. You're not looking at where the stock was a month ago, even 3 days ago, for that matter. If we start seeing green candle, red candle, sell off, retrace the whole thing, that's not normal price action to say I have a lot of conviction. So
you know why? It's because the institutionals have no conviction, and we're piggybacking on the institutionals. Basically, is what we're really doing. So if they can't make a decision, how can we?
Right, exactly. And a lot of people want to ignore that. And let's just we'll just stick with the SPY. You need to train yourself to recognize if institutions are doing something obvious. And you could just as simple as, what is the flow of the daily charts? Are we seeing a consistent push higher, push lower? Are we seeing persistency with how many green candles in a row, red candles in a row? We're not. We're seeing sporadic green, sporadic red, sporadic doji type candles. There's no fluidity to pushing down, pulling back, flowing down. We're not seeing consistency to green. So just that alone, without even reading anything else on the chart, you could look at that chart and say, from day to day, the picture's changing. And that should also affect your trade management. It should tell you, you know what? It's not a clear picture. I'm okay with taking less trades. They have to be my primo trades because the bigger picture, stock-specific ideas are what's in play right now.
Correct. Yep, I agree.
And I hope we're doing a good job of explaining how the market and individual stocks are unfolding and how that ultimately translates into how to manage your positions. So here's the SPY at the end of the day. We just took a look at that. Now, what's ironic about this here, which stocks to buy today, this list is infinitely smaller than even it was just yesterday. And even the short sale list was tiny. I mean, we had Nike. We'll discuss Nike. TSO really didn't do that much today. And actually, these three on the bottom here, you can see the criteria was only 20-day moving average last 5 days and yesterday. So even with that criteria, there still wasn't a lot of stocks. Now, again, I want to make it clear. These are the last filtering part. The first filtering part is an average of 2 million shares and an average daily range of $1.50. So I'm filtering out which stocks meet this criteria first. So just to give you an idea, get emails once in a while, say, "Oh, I found a stock that you didn't pick." Well, that's good. I like the emails. No problem with that. But just to give a little context to what actually makes it into the filter. We did, however, call out Nike today as our trade of the day today. If I actually think I put it in as yeah, it was even in as the stock of the day. So we actually solid long, looking for order flow to follow through. And we had a little bit further down where we were hoping to get it at yesterday's low to give us a little more room to the upside. But obviously the market opened higher and the stock pushed higher. Now there was a couple of different entries. We discussed this one here quite a bit, which also, if I'm not mistaken, coincided with at or near the previous day's high. So getting involved in a flag or a pause near the previous day's high is always good as long as you have room to go, which in this case we did here, which is the previous day. Actually bounced. The market started to tank. The stock came back in. So you probably would have ended up taking a flat on this one. But here's the key here to me, Marion, is even though, and I'll flash the SPY up here really quick, the SPY actually traded below the opening price at that point. Nike did not. So just that alone is showing some good relative strength. So when the market started to bounce and this stock actually was still above the open, which is this level here, then you would have looked for an entry price, which maybe you could even gotten here at 1 o'clock in the afternoon to actually start this entire 2.5-hour rally. You got an inside candle here as the new hour starts at 1 o'clock and the market starts to bounce. So you get a pretty clean entry there. Then you get another 20-minute pause here if you still liked it, and then obviously start to peter out a little bit at the high of the day. So out of all the what we might call indecision that was going on in the overall tape today, we had Nike as one of the best stocks on the board today. So there's money there if you go in there and you're patient enough to trade the ones that actually line up pretty good.
Yep, I agree.
And obviously the term saying money's there is relative. Money meaning good ideas. Inside days were kind of taken off the board as well today because, again, inside days you prefer a nice inside candle and then a nice breakout from basically where it closed yesterday. But because the market gap today, a lot of these inside candles were off the list as well. Google L, interesting trade today as far as it being an inside candle. You can see kind of here what I mean. You would like it to open here and then trend out of it. So kind of, it actually moved probably as far as you would have liked it to have, but most of the move was actually on the gap here. So it kind of took out from here to here. It sucked out over almost $10 in price action that you would have liked to have seen a flat opening here and then push out of that.
Yeah, that was kind of a tough one to trade because of that.
Yep, exactly. Because, again, that's even what we said about the SPY. How do you trade that? With it moving its average true range, but before even half an hour and the day's over. So you got, it's like, all right, how much room does it have left? And we saw that it actually pulled back. So that was kind of the area that it petered out. So on the short side, again, as we had discussed, pretty big list of ideas to the short side. But then again, you think about this list and then you go back to what we started out asking that question, which is, do you plan to trade weak stocks long? Well, today, that was really the only thing to do as far as like aggressive stocks on the long side. Yeah, you definitely had some short sales that ended up rolling over in midday. But again, most of those stocks were in a bearish order flow. So you had to really say, all right, they're above the open. The market's, it was a tough scenario today, I think. I don't think that today was one of those days you just, wow, I wish I was trading today. A lot of stocks in the Dow closed positive from the open. That's this column here, which is actually pretty good to see. But this is the one that I want to kind of end the meeting on today, just to call it out a little bit. We've had this level here in Goldman Sachs for a while. We gapped higher, traded above. I basically wanted to end on these reference points and why they're so crucially important, Marin. We pushed down below the opening price here. And again, this is emphasizing why we watch it. The opening price represents the distinction between today's order flow. We pushed below it and went back, and when I tell you it's not coincidence, 1, 2, 3 times it tested that level, that's not coincidence. You should be tracking the opening price and ultimately ends up, okay, now it's trending down. You have the previous low as one target, and then look at, lo and behold, that's this level here that we've drawn for a while now that ultimately intraday, now again, you could say, oh, that's when the Yellen thing turned around. It doesn't matter. It stopped almost within 10 cents of that level. You need to know your levels in multiple time frames, and you need to know your levels consistently. In other words, don't change them. Like you can't, one day stochastic, next day is MACD, next day is Bollinger Bands. Whether it's these specific levels or a specific indicator, You will find it easier to be consistent when you're consistent in how you look at things.
Yes, I totally agree. And it doesn't make any difference what the reason behind it is that it did do it.
Exactly,
I think
exactly. And
that,
actually, William brought up a good point in the meeting this morning about sticking to what you believe in. The more you believe in it, the easier it's going to be for you to follow it. And the more you use the same one, ultimately you believe in it more. So it's kind of like a catch-22. You have to use it to believe in it, but you don't believe in it yet until you use it. So
right.
be definite, give yourself a chance to get comfortable with whatever indicators you're using, and then you should be in pretty good shape with actually having reference points. And then when you combine that with the bigger picture, you start to really feel like you're in control of your trading. So I think tomorrow, Marion, I'm looking for a flat opening. If we get another gap higher, I'll be honest with you, I'll be a little flummoxed.
Yeah.
Not expecting it, but again, we'll trade it just the same way we did today. We'll have trades on both sides of the market like we did today. Again, it's just a question of what kind of conviction level you have for the way the price action is unfolding. Because if we have another update today, and again, we'll just go back to the SPY. If we have another update, excuse me, tomorrow, that means that we're essentially going to be wiping out these two big down days when everybody thought the world was collapsing over here when
Yeah.
we broke the
You have
188.
to be ready for anything. You have to have the different scenarios because none of us know when this is opening. We can make our, we can try to reason it out. But I mean, I did not expect to get up and see it up 181.
Nope. I mean, as of right now, we are almost getting what we expected. We expected it to be inside consolidation of this big candle here. I was kind of expecting like two light volume days in here, maybe hovering around this support level and then going down on Friday to continue for what we saw here on Monday, on Friday and Monday. So we're technically still inside that big down day, but we're literally right at the top. So it wouldn't shock me if we open up here. Look, if I guess what I'm trying to say is, if you're sitting, especially trading at home by yourself, and you're like, "What is going on in this tape?" Trust me when I tell you, it's not necessarily you.
Right,
Okay,
right,
this is
exactly.
not the easiest tape in the world. It is readable if you're specific in what you're looking for. That's the key we want to make out of today's
Yeah,
video recap.
I totally agree.
All right, Marion, thank you very much. Everybody have an
Thank
awesome
you.
night. We will see you tomorrow.
Good night,
Bye bye.
everyone.